Real estate investment for the typical investor usually means investing in completed projects. But the opportunity is now open to invest in a property project before it's even completed. And it's blockchain technology that has made this possible. Cho Keng-Yut checks in on this emerging development in the real estate industry.
Developing a property project from the ground up takes years and involves a lot of risks. Traditionally, the domain of property developers, who have the financial muscle, expertise and clout, this space is now open to accredited investors, or AIs. Fraxter, a real estate co-investment platform, allows AIs to co-invest with fellow investors in select real estate projects.
Now, everyday investors like yourself or me can actually own a piece of a grade A office tower in some of the biggest cities in the world. From an asset holder standpoint, it creates new sources of liquidity, allows them to improve that asset or create new yields from that asset by dividing up the ownership in the same way that companies do with public offerings of their equity.
The initiative has been made possible by blockchain technology.
We see blockchain as a way that we can replace traditional ownership instruments such as share certificates, title deeds, and also a centralized registry. So in other words, we have actually placed a digital wrapper around an asset and issued digital tokens to our global investors so that they are able to participate in that particular investment.
Rachel Teo of Daniel Teo and Associates is one of the co-founders of Fraxter.
It was about the new technology that was available. We were interested to see where we can take this new technology. My father has always been a strong proponent of fractional ownership, and we have been co-investing with business partners through the years in various business real estate projects, which could be property development or it could be a buy and hold project.
Fraxter has since raised enough funds for its first freehold landed residential project in the northeastern part of Singapore. Investors come from Singapore and Australia. The investment pipeline remains strong. Besides development projects, the platform is looking at properties in Tokyo, Melbourne and Berlin for asset enhancement.
We are looking at properties all over the world, and these can range from hotels, commercial buildings, and even nursing homes. These are completed projects where we feel that we are able to strategically reposition the asset to increase the return for the investors.
Fraxter doesn't see itself competing with the traditional real estate players for deals.
We are looking at properties where the big funds or the big property developers do not want to waste time on. So this is like probably 10 million Sing to about 50 million Singapore dollars type of investments.
It also doesn't think blockchain technology is disrupting the entire industry.
For real estate developers, they find a piece of land, they raise money for it, they develop it and then sell it, hoping to make a profit at the end. So that entire process has not changed. But having a digitized platform like Fraxter, it allows us, or it allows developers to actually raise money from more people in a shorter span of time. So that process of the fundraising portion, that is the one that is actually being slightly disrupted.
But where blockchain technology can add the most value is really in the area of smart contracts.
The management of service level agreements through automated processes rather than just handing custody off from person to person or party to party. So that the automation of that is really where there's a lot of value, and that's incredibly infantile right now.
So why will smart contracts be so powerful for the real estate industry?
What the blockchain is meant to do in respect to smart contracts is to basically make sure that no party can go back and change that after it's been handed over. So you have, if someone tried to change a single record, if I tried to change it, now this is my car, the computer system, all of the other records would go back and say, we don't approve of this because that wasn't changed in our system as well at the same time.
This benefit of smart contracts is more obvious in the less developed countries. Smart contracts give the security that ownership of an asset won't be tampered with.
For example, the title deed of a property not only disappear, fraud could happen to cause that title deed to be what they call dirty. So it's not a clean title deed, or if a property has not been transacted in a long time, people are able to forge title documents, for example, and then there will be a dispute as to the real actual owner of that property. And the reason why all these happen is because everything is kept at either a registry level or even as a paper form title deed that over time may be lost, maybe through fires and all that.
Still, property has often been used as a conduit for illegal activities like money laundering and terrorism financing.
We actually implement really stringent KYC and AML checks on our investors before we allow them to come onto the platform. So these checks will check basically their name and identity against a known worldwide sort of blacklist.
On top of these checks and balances, there is a need for regulators and other professionals to come together to enforce compliance.
The disclosure requirements, of many of these platforms are not in the same way as any other traditional form of investment. We need to make sure that the government is involved, regulators, the tax professionals, and all of them to be, we need the guidance, the counsel to make sure that they are functioning properly, and that, at the end of the day, that as an investor, you can take advantage of the opportunity, but at the same time by having, all of these professionals help us to protect also our interest.
Currently, Fraxter's products aren't open to non-accredited retail investors. But the platform has plans to create a secondary market for digital real estate shares. This will function like a stock exchange, where investors can freely trade digital shares with one another.
In the future, we intend to target non-accredited investors where we feel that actually there's a high demand for institutional grade kind of investments. If we are able to bring the investment quantum down to say 5,000, 10,000, then that will really open up that space for retail investors to come in to invest together with us.